Hi, everyone. This is Jason Bierak of Wall Street for Main Street. Welcome back to another Wall Street for Main Street podcast interview. Today's special guest is trader Greg Mannarino. Greg is going to join us, which is myself, Moda Wood, and John Manfreda, in a roundtable type of discussion where we talk about all different types of markets. So thank you for joining us here today, Greg.
Oh, thanks for having me. It's always a pleasure.
All right, Greg. Let's get on to the first question. On your video blog, you're calling a bottom in gold and silver, but people should remember they shouldn't even worry about the spot price and dollar cost average. But today it's up big time. What do you think's happened? Do you think, and also, do you think George Soros got some info that they're going to let it rise?
Yeah, that's funny. You know, it's very possible. And these big players, I mean, they obviously have information that's not available to the rest of us. Just looking at what's going on here fundamentally and technically regarding the metals, I can say with a high degree of confidence, and I've been saying this now for a couple of weeks, that we've hit a bottom regarding the paper markets, and I think from here, unless they try to pull off some absolutely monstrous scheme, I can't imagine how the metals can go any lower than where they are at this time. And that's the way I see it right now.
Yeah, and Greg, to add to your point there about the fundamentals of the market, we just got the World Gold Council coming out today in some press releases and saying that in Q2, India is supposed to import around 400 tons of gold. China last month, I think, imported around 300 tons of gold. If you annualize or even average out their buying purchases, these guys combined are buying over 100% of the annual mine supply. And the argument that I hear from gold bears is that there's so much gold above ground, but almost all of it is spoken for. And why, if there's so much gold above ground, why are allocated accounts where people pay storage fees? Why are these things being stolen from? Why aren't people getting their metal back? And why isn't Germany getting their gold? They're only supposed to get a little portion of their gold back in 7 years. Why don't they just send over a battleship and get all their gold back next week? So this is why I don't agree with the above-ground gold stock. The gold really doesn't change hands, or maybe it's already changed hands, and the G7, what has dumped it, has gotten rid of it.
Yeah, exactly. You know, I think that people have such a hard time grasping the concept that, and I don't understand this, honestly, that gold and silver are finite resources. They think there's just enough to go around and everyone's going to get what they want. They don't understand that this mechanism, this scheme by the powers that be is designed in such a way to keep people's, again, this is something I go over constantly. I go over my book, The Politics of Money. It's all about perception. And many people are being blindsided with purpose now with regard to the metals. They do not want people in the metals. As you know, as all of us here know, they want us in fiat. They want to keep everyone believing that pieces of paper with numbers printed on is real money. It's
and
insane.
Also in the stock market, too, and buying U.S. Treasuries.
That too. Absolutely. It all plays in together. And as far as I'm concerned, I believe that we are now at the end of this game here. And that's another reason why I think as we move forward, we are going to witness a metal mania. As the fiat system that we're in now ceases to exist, we understand the U.S. dollar is losing its reserve status. People who are listening to this, I urge you to do your own homework. Go look into this. I'm not pulling this out of a hat. The U.S. dollar as the world reserve is coming to an end here. And because of that, the dynamics of everything is going to change. So you do not want to be in fiat dollars, people. You want to be in metals, period.
Now, Greg, you worked on Wall Street. Sorry to interrupt you, John. You worked on Wall Street for a long time, so you know the sentiment of the traders. Is there a certain type of perception, you would say, on Wall Street where just people hate gold, that no matter what, even if gold is going up $100 a day, there's going to be people on Wall Street saying it's a bubble, it's useless, it has no intrinsic value, blah, 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 blah?
Oh, absolutely. People still do have that mentality, but there are those who still look at this whole thing from just a way to, add to their wealth. And I know a lot of people who are traders that, they choose not to hold the metals. They're buying in GLD and SLV. I'm not saying that I don't do that and trade those from time to time. But, I think understanding the mechanism of it all, you have to hold these things. You have to have tangible assets at this time here.
You mean outside the system? You mean outside the banking system? Even allocated accounts, then, which people thought were safe because they were paying storage fees. Your bars, your cereal bars, were supposed to be separated from other people's bars. You were paying Morgan Stanley and these guys big bucks in storage fees and insurance fees to do it. So you're saying get it out of the system, then get your metal out of the system.
100%. You want to have your own access to this. Without a doubt, I have access to all of my own. Whenever I want to touch it, I can go over and play with it. And that's what I suggest people do as well.
All right, well, one other thing. When you talk about allocated accounts, you mean like the bullion banks, right?
Well, the investment bank, the allocated accounts, John, are like at Morgan Stanley and Goldman Sachs, and you can store metal. You can store metal there in your own name, and it's separated, and they're supposed to mark the storage bars and say you have these bars with these numbers on them, but you pay big bucks in storage fees and insurance for the right to do that. Those bars a lot of them have been stolen. There was a default on ABN AMRO, and there's others. Situations where I've heard where those allocated accounts, the bar numbers don't match anymore, which means the bankers are taking the bars out of the vault and allocated accounts just to meet demand elsewhere to put out fires. And then they're putting new bars into the old accounts with the non-matching serial numbers.
All right, because I was going to say, I work in the retail dealer section when I'm not at Wall Street from Main Street. Those accounts are pretty safe, I would say. We all, the companies always audit them and everything, but the bullion banks, they're another story. All right.
Yeah, those are the bullion banks, and those guys rob Peter to pay Paul, basically.
Yeah, all right, the bullion banks. Okay, those are a different story. All right.
I think that's been going on for a while with the robbing Paul to pay Peter thing, and I don't think people realize that too. We've been hearing stories about that for years now. I just think it's becoming more prevalent now, and yeah.
Yeah, I mean, I agree with you, Greg, that those stories are going to become prevalent, but you never hear about them in the mainstream media because anyone who even brings it up is a conspiracy theorist, right?
Exactly. like me, right? Like you, like all of us. We're living in a fantasy land. We have no bearing on reality.
Now, you look at the chart for gold and silver, and you used to do technical analysis on gold and silver market, and I used to do them too. But until recently, I stopped doing it. I think you stopped doing it as well because it's getting hard to call a bottom and when it's going to go up and how much and et cetera, because the big banks are. I don't want to start another conspiracy theory, but I believe it's being manipulated by the big banks. So would you agree that doing technical analysis on gold and silver is pretty hard, and sometimes I find it pretty pointless to look at the short-term movement because you don't know what's going to happen in the gold and silver market because J.P. Morgan or all the other banks can start another big short position and knock the price down at will.
Oh, I believe that to a certain degree, but I am a chartist. I am constantly looking at charts. I think if it weren't, I pretty much have been saying for a couple of weeks now that we're at a bottom here with regard to the metals, and that is partly looking at things from a technical standpoint and obviously a fundamental standpoint as well. I think we saw gold and silver take a big hit several weeks ago. Everyone was saying that was a bottom, and I came out publicly many times saying I'm not convinced. I took a lot of heat for that. But it looked like I was right, but that was just from looking at charts and taking in the fundamentals of it all. And I think again, but your point is valid, and that is what I do fear is they can do what they want when they want at any moment. But I think if they were to push this down again, that would be the greatest buying opportunity in the history of the world, in my opinion, and I can promise you I would buy a lot more.
And also, another way to look for bottom in gold and silver is look at the commitment of traders report, the CO2 report that comes out every Tuesday and Friday. Mm-hmm. And there's a lot of people out there that tell me that the CO2 report tells them more about when a bottom is happening rather than the chart, because and if you go back in history, like in 2008, and you compare it to right now, the COT report, it's almost similar to what's going on, because the commercials are going net long, the short positions are going down, and so a lot of people out there are saying that it's ripe for a rally now. So do you agree that the COT report can be a better indicator for a bottom?
Well, I wouldn't necessarily say it's a better indicator. First of all, let me just say this. My initial training was as a technical analyst. So I always kind of go home to mama in a lot of ways. And when I hear what's going on, and I look at the fundamentals of things, and then I sit back and I literally look at the charts and I say, okay, well, what's going on here? And I rely on so many different indicators, and I have all traders have their favorites. I have my own favorites, and you use these in combination. And I don't know. It depends. I mean, for me, I like to look at everything. I take in what's going on overseas markets, the markets here, currency markets, bond markets, everything, and try to put it all together as a puzzle, like in my head. And sometimes I write this stuff down, and then I'll look at the charts and say, okay, Mr. Chart, what are you telling me? So for me, it's multifaceted. It drives me crazy, but that's really the truth.
Yeah, we use fundamental analysis, technical analysis, and sentiment indicators to try to look at stuff. I think you've seen our research on the miners, so you know that if gold and silver do go any lower, if this intraday rally that we had yesterday, if this is not the bottom, then we're looking at bankruptcies potentially for a good amount of the miners, because they just have been very poorly run businesses. And then you see the premiums in Asia, and they haven't really dropped that much. The premiums here in the United States for online bullion dealers, those are starting to come back down. Delivery times are longer, pretty long still. I think I saw like more than 4 weeks for a lot of deliveries. But, you know, if the technicals do drop much lower, I mean, we're going to have some actual pain in the real physical market where people are going to want to buy more metal in the lower price, and there's not going to be metal available.
No, I really would have such a hard time. I mean, I can't imagine that it's going to fall from here. Something monumental would have to happen. If we were in a real free market, which we know we don't have one, but if we were, there would be no way. And I would be able to say with 100% certainty that we are at a bottom. But because of the situation, I still think there's such a high probability, and I did a video, I think, with that exact title, a high probability that we were at a bottom here. I wouldn't believe it. I would probably, you know, I don't know what I would do. All I can say is this: if it did drop, if we see any,
you would pull a George Soros and start buying call options on the junior miner gold index or something like that.
That as well, and I would just, you know, go out and load up a truck full of more metal. That's a fact. I can't imagine we're going to drop much further from here. You know what? I could be proven wrong, and you know, it's possible, but it would have to be something monumental to do that.
Well, if there was a big drop, your new nickname might be Brinks. For how much
yeah, I feel it'd be my new nickname for sure.
But I actually have a question about this flash crash. I actually think this is a blessing. Well, not because you get to add to your gold and silver holdings, whether they're miners or strong royalty companies or bullion, whichever position, or both, where you got to add to at a much lower price. But I actually think this is, before this flash crash, I guess, all you heard on the mainstream press was there's no investment demand. There's no investment demand. Well, after this crash, all you saw was Perth Mint had to increase production to meet demand. That's why they're the only mint whose premium didn't go up, is they increased production, and they even worked on weekends, which is rare for a mint because they're government-owned. Well, at least Royal Canadian U.S. But not only that, they could no longer ignore, the press could no longer ignore the demand for Asia, and I think this is the first step towards price discovery starting to reoccur incrementally. But what do you think?
I think you're absolutely right. I think that the flash crash in many ways was to shake out the weekends. I think it was done on purpose for a lot of ways. I mean, how does that just get dumped onto the market? And then where does it go? I mean, you know, it just doesn't disappear into wherever it goes. It has to go someplace. So how does that even happen? The whole mechanism is twisted, and it doesn't make sense, and it doesn't work. And that's the whole fly in the ointment. Can they do this again? Maybe, but I can't imagine that they're going to be able to get away with it this time without huge buyers coming in there and just scooping all this up and causing shortages. Shortages are going to happen. There's no doubt in my mind that at one point we are going to see shortages in metals, and that's going to lead to a mania.
I believe, Greg, that this shakeout here, and it doesn't have to be manipulated all the time. It just has to be manipulated to the point where the overhead resistance prevents a breakout, and if there's enough false breakouts, there's weakness in the chart. The high-frequency traders and the trend traders see the weakness in the chart because there's been 4 or 5 false breakouts in gold and silver and the miners over the last 12 months. And then people say, look at all the false breakouts, it's time to go short. So that's all that needs to be done on the manipulation front. Or if you're an investment bank like Goldman Sachs, you can send out negative reports and stuff like that. But you look, though, at the metal that left GLD, 300 tons of it, I think. And I think Asia absorbed that in 1 month. So the press is saying, look at all the metal that left GLD. No one wants gold, but I mean, look how quickly it was absorbed. Exactly. So it's just they don't bring the counterpoints up. I don't know if it's the media people, if they're just stupid, or if they're intentionally lying, or what. I just don't know. They don't have the right gold experts on, though. If they do bring them on, like you or other people, they get 2 minutes, and the people who hate gold are on for 20 minutes. Railing on it, or there's 10 articles on how bad gold is. I see them every day. So I guess that's another contrarian indicator. Let's switch topics here to the global economy in general. Let's talk about inflation. We hear every day, multiple times a day, that the U.S. economy is recovering. The other markets are not. China's not doing as well, stuff like that. But the U.S. is doing well. There is no inflation, and the Federal Reserve can be out of their balance sheet, this massive balance sheet, by the way, that's growing by another $1 trillion by the end of this year, in only 3 or 5 years. Can they get, in their opinion, out of this mess? Is there inflation? And who's going to buy the paper that from the U.S. Treasury, because the U.S. is still running more budget deficits? Who's going to buy it if the Fed's not?
All right. Number one, we all know there's inflation. Anyone that's listening to this obviously buys food, obviously, buys energy and fuel. So the whole talk about no inflation is ridiculous. Just go back 5 years and compare prices to now, 10 years, and you'll see where this is all going. The Fed cannot in any way unload their balance sheet without disrupting the entire world markets. And they know this. There's no way out. The only way out of this is going to be war. The U.S. dollar is losing its reserve status. This is no joke. All the conflicts, starting with the Vietnam War, have been fought to protect the petrodollar. Go ahead.
And Greg, you think then that the Fed even trying to unload the balance sheet or cutting back on the amount of assets to purchase that would crash the stock market then very quickly?
It's going to destroy it. It's going to destroy the market, 100%. And they know this as well. They can't stop printing. There's no way out from this. There's no way to stop it. There's no way to cut it back. In fact, I've gone on the record many, many times saying they're going to print more. It's a drug now, literally, that the market is addicted to. Look what happened today. Just today, we got bad economic news across the board. And what happened to the market? It went up almost 100 points. It closed up only about 20, I think. But
why do you think it went up?
Because the market people realize the Fed can't stop. And
so then you expect it to go. Let's make sure that we're clear on this. So then you're saying the market expects the Fed to increase quantitative easing, so that's why the traders jumped ahead of the Fed here and moved the market up because it's anticipating even more QE?
Well, I think more. Well, you mean over and above the $85 billion a month?
Yeah,
Maybe.
$85 billion.
Maybe, but they don't think the Fed is going to stop until, ever. That's the truth. And I mean, we all know this, but there's always that caveat here that the Fed's solution to this problem is going to at one point cause a greater problem down the line here. And that's with people losing faith in the whole system is built upon faith. I mean, the full faith and credit of this nation or that nation, or the fact that these pieces of paper are real money. But that is going to come apart. It is coming apart already. And
starting to come apart in Japan.
Exactly. I mean, that should be the model for Ben Bernanke. He should be looking at Japan and saying, look at what's going on over there. They're printing like there's literally no tomorrow. And is it helping anything? Absolutely not. It's incredible. But believe me, Ben knows this. He's not stupid. The Federal Reserve and the whole bunch of that crew over there, they're flying by the seat of their pants right now. This is uncharted territory. They have no idea what to do, how to stop it. They can't stop it. There's no free market. We understand that. When the free market at one point does its job, what is the job of the free market? For those who don't know, I know all you guys do, but who are listening, the job of the free market is to determine fair market value, period, the end. That is not happening. That mechanism is going to, once again, snap back in, and people are not going to believe what's going to happen at that point. Everything is going to readjust to fair market value, and that is going to the metals will actually see what they're actually worth, bonds, the dollar, equities. And I'm not convinced that this is going to be a slow burn. I think it's going to happen rapidly, very rapidly, and people aren't going to believe it when it happens.
And even if they do try to unload their balance sheet, the potential bond buyer, they're going to demand at least double-digit interest on these bonds, because they know giving a loan to the U.S. government is a high risk, so they're going to want a higher premium for taking that risk. So if that happens, then the housing market would crash, because the mortgage rate will go up and credit card rate and et cetera will all go up. So it will completely crash the world economy.
Yep, I agree with that. I agree 100%. That is how it's going to work out.
Now, going back to Japan, Japan right now is printing $130 billion a month, and trying to hit the 2% inflation rate. And in result of that, the U.S. dollar has been going up against the yen. Do you think somewhere down the road that the Federal Reserve is going to have to try to outprint the Japanese central bank and print even more, maybe double their Kiwi program from 80 billion to 160 billion or 200 billion? Because I know the last thing they want is a rising dollar.
Mm-hmm. I've gone on the record saying that many times, that the Fed is going to increase this 85 billion to who knows what. They're going to have to do it. We're in a currency war. We understand that. When one nation does this, a major economy, they all have to follow suit. Plus, like you said, the Fed cannot allow the dollar to become stronger. The Fed is going to try as hard as they can to keep suppressing interest rates, but at one point, is going to be the market that determines fair market value for the assets. The dollar is going to plummet, and interest rates are going to skyrocket.
One other thing is, you keep talking about the dollar plummeting. Would you say paper currencies, most of them would plummet in general with it, just not as far as the dollar?
Well, all of it, what do we know? We know this. All the central banks are printing cash like it's going out of style. Why? Because it is going out of style. That's something I've been saying for the longest time. So what can we expect here? Well, the U.S. dollar is still the world's reserve. And we have a runaway Fed that keeps flooding the world with dollars that are not needed. The money velocity is at historic lows. That's the scary part of this entire thing, because he's printing cash in an environment where it's not needed. And it's going to cause distortions. It's causing distortions everywhere you look in the market. I don't care what market it is, whether it's currency markets, whether it's bond markets, whether it's equity markets, metals markets, there's distortions everywhere. And that can't be sustained. So what's going to happen is, at one point, people realize the U.S. dollar is nothing but a piece of paper with numbers printed on it, they're going to want to get rid of these things. So what are they going to do? They're going to start spending them on anything just to get rid of these dollars. And those dollars are going to come rushing back here to the United States. We're going to get massive amounts of inflation, massive currency devaluation, interest rates go to the moon, and all this cash is going to look for a place to go. And in my opinion, it's going to go to commodities because they're real things. And that's why we're going to see the mania in metals develop over time.
Yeah, I think, Greg, we met on the timing here with the commodities. We surprisingly, rationally should have seen the money already go into commodities, but we've seen a lot of this flight capital from Japan, from Europe, that's fled their markets because of currency devaluations or stupid politicians in Europe with 75% taxes or higher. I think in France now they're talking about 100% tax in some cases. You're seeing capital flight and leave those markets and go to the United States, go into the stock market, start buying up U.S. real estate. It hasn't gone into the commodity markets yet, but there is a lot of money outside in other stupid countries in the G7 where that money could eventually start going into commodities, and then that's when you're just going to see stratospheric rises in commodity prices like what you saw in the stock market and then the reinflation of the housing bubble.
Mm-hmm. And I think that some of what we're seeing now is some fear here with regard to the equity markets. And, I know a lot of traders, a lot of people involved in this, and everyone's kind of ready for a possible significant pullback here. And what's going to happen to that cash? It's going to be reallocated into undervalued assets. And right now, if you ask me, that's gold and silver. And a lot of that money is going to go into the paper markets, unfortunately. But I think a lot of people are acquiring the real thing. Most people that I know are acquiring more and more of the physical assets.
Well, one other thing is I don't think it'll just go into gold and silver. The most painful one, I think it will go into food. And you start to see that China just bought the U.S.'s largest pork producer. And I think they're going to continue buying up more food, and food prices will rise. And I think that will be the real crisis, not that will affect everyone in the world.
Yes, I was aware of that, what happened with China. And everything is going to rise because the dollar is going to lose value. So it could take more of those dollars to buy everything. It's going to be across the board. It's going to be scary. They're trying to you see here, I'll tell you something else. The fact that they're sitting here and trying to convince us that there's no inflation makes me realize that they're afraid of it. And that's why they're talking about, we're going to taper QE. They understand there's no way that they are not aware of the monster that they are creating, have created, and there's no way that it's not going to attack the world. Literally, the Federal Reserve has become literally public enemy number one, not just here in the United States, but of the entire world. And because the U.S. dollar is the world reserve currency, that the creature that they've created is going to destroy the world. That's really how bad this is going to be.
Greg, as bad as the Fed is, it's not just the Fed. It's other central banks, too, that act in unison because they're acting in concert with each other. I mean, they are doing currency wars. Some countries are doing currency wars with each other, but some of these are coordinated actions, and it's just all, Keynesian philosophy where people don't want to do stuff for themselves. They don't want to be independent thinkers. They don't want to go back. Part of capitalism is bankruptcy. We should have had a lot of firms go bankrupt, and that was not allowed. So this is all part of the Keynesian nonsense, which is central planning and government intervention and all that stuff. And hopefully we can wake up more people with these podcasts and get people who want to produce more than they consume, who will save and invest, and teach others to do the same thing. And that what's going on right now, what the government is doing, is, it's hurting people. It's only helping the people on Wall Street who are macro traders and hedge fund managers who can go and borrow $10 million worth of Japanese yen at 17 basis points and buy a couple dividend stocks for 5% and, live off the interest payments. That's all that this free money is really helping right now, right?
100%. You absolutely are correct. And that's what drives me crazy about this, is because people don't realize what you just said in a few paragraphs. It's incredible.
Well, because of all the government intervention and the Federal Reserve keeping interest rate at an all-time low, as Jason said, money is not going to commodities, but instead it is going into real estate as of now. So all the capital misallocation that's going on, and yet people are still buying homes. Wall Street and Chinese are becoming landlords here in the United States, where they buy up homes and renting them out. And now we have a small bubble going on in the real estate market. And I just wanted to get your opinion on your thoughts on the housing market, and how long do you think it's going to last? And I don't think it's going to be like the housing bubble we had before 2008. I think this one's going to be a little bit short-lived, only because people are buying because the mortgage rate is low.
Exactly. We can't have another bubble like we had last time for many, many reasons. The drivers of that bubble are gone. So there's a whole new set of rules right now. Everything is rewritten. People say, I'm going to sit in my house. I'm going to wait another X amount of years for my house to reinflate to the prices it was before. It'll never happen. Can't happen. I outlined the reasons why in my book, The Politics of Money. But I do think we're in kind of, a situation where in certain parts of the country, housing is rising very rapidly. And it has a lot to do with interest rates and all this stuff. And, again, a home is a tangible asset. I'm not saying something bad. I would much rather own than rent. I am an avid believer that, the average person, leases, rents, and borrows their way through life. That's not where you want to be. You want to own things. That's the difference between the average person and the rich. The rich own things, period, the end. And but that's a whole other topic. But I do. Go ahead.
In terms of the asset allocation strategy, Greg, I think you outlined something important. That as much as we talked about precious metals and owning physical metal, people need to have some kind of other diversification strategy, because we don't know what the government's going to do with windfall profits tax on the metal or confiscate the metal or anything like that. So people should own maybe some cash flow rental property income if they have the capital and the financial education to do that. They should probably own some stock positions in dividend stocks or stocks outside the United States, and have a diversified portfolio if they have the capital to do so, besides just commodities and precious metal.
Oh yeah, 100%. That's absolutely true. I'm glad you brought that up. People do need to understand that, you can't just have all your assets in one spot. Maybe some people do that, but you can't. You have to own a diverse amount of things and have your hands in a whole bunch of assets across the board.
Well, especially with the games the government can play, because they can change the rules anytime they want. I mean, I think in France now, Greg, I think it's illegal in France to pay cash for gold. You cannot go and take your euros and go buy gold under the table. They want a paper trail of it.
Wow, that I didn't even know that. That's amazing. Scary, but amazing.
But according to Bernanke, it's not money. It's not value.
Yeah, it's not money.
Tradition.
Why do we hold this? Oh, it's for tradition. Really? Oh, God.
Well, Greg, we appreciate your time, and thank you for coming on. If people want to find out more about what you do and your podcast and your article and your book, where can they go?
Probably the number one place would be YouTube. I do a business day market report on YouTube where I talk about all this stuff. I also have a website. It's free. It's called traderschoice.net. I do put stock and ETF picks up there. It's free. There's no sign-ups. There's no passwords, no anything. Please friend me on Facebook. I will never turn down anyone that wants to friend me on Facebook, and we could talk there.
All right, Greg. Thank you for your time.
Oh, thank you.
And for our listeners out there that's listening to this podcast, right now we have a free silver giveaway contest. So people go to our website and subscribe with us, or they can subscribe on YouTube, and they automatically become eligible to win a free U.S. silver coin. So check that out. So thank you.